Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Last week, Halloween lived up to its name, providing a spooky week for the Australian dollar after spiking to an intraday high of 69.29 before its retreat. It is assessed that since the challenge to the upside, the market should back away from this level and therefore look towards 68.60 as a potential target. Still, the market has found a little bit of momentum after the recession fears have somewhat backed off after a better than expected jobs report, which was above economists' forecasts. US employees hired more people than expected last month in the US, despite a strike of General Motors, and hiring in previous 2 months was also stronger than expected. The US economy added 128,000 jobs in October, the Bureau of Labor Statistics reported in its monthly outlook. Although the market was a little bit shy of its unemployment 50-year low, because the market notched up from 3.5 to 3.6. Nevertheless, beating the forecast of 90,000 jobs to 128 is a very strong number to my view and should still keep the US dollar in relatively bullish stance. So therefore, I do believe the Australian dollar will back away. But also, the eyes shift now to the Reserve Bank of Australia's rate decision tomorrow at 2:30. It is assessed that the market is likely to see no cut on the Melbourne Cup Day, so therefore could keep a little bit of a firmer tone to the Aussie dollar, but from the technicals, I believe we are breaking down. So let's see if the market does retreat from 69.25.35. As you can see, we have the resistance still holding in the euro at 111.80 to 112.15. And from that, I do expect to see good supply returning and eventually see the market drop away to 111.15 and lower down to 110.65. Dollar yen did post a short intraday low on Friday of 107.88, with the support still seen at 107.85. I do believe the market is preparing itself for its next move, but the bearish divergence coming through very strongly. You can see from the move, the market is probably caught a little bit long, and therefore stops are likely to be triggered once we get a break of 107.85 and look down towards 107.15.35. Little to report on the pound, as it looks somewhat like a sandwich as the noise of the market between 127.75 to 130.35.55 holds. The market is now waiting to see what the outcome is after a snap decision for a 12th of December poll takes place. And the market is still likely to continue this sideways pattern, therefore it keeps me neutral. Well, the market is still pressuring the top side of the rally after gold firmly polishes off to a brighter start to this week as it holds above the level of 1,500. Now a break above the level seen somewhere around 15.16 should ignite further move up towards 22 or maybe up towards 28. Any pullbacks see support at this stage around 08. So do keep that in mind, because underneath there, as long as we maintain above 1,495, the bullish outlook remains. Finishing off with oil, well, the market surged nearly 4% on Friday and now looks back to its target of 56.40.70 as we now coast just under there. I do believe from the rebound of this support and also for the fact is that the market is bullish to some extent, could see a target of 57.55. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday poll. And I hope you enjoyed the great start to this new day.